10 high-paying finance jobs AI will delete by 2030. For decades, finance was considered one of the safest and highest-paying career paths in the world. People believed that numbers, money, and financial decision-making could never be replaced by machines. But artificial intelligence is quietly dismantling that belief, one algorithm at a time, across banks, corporations, and global markets. By 2030, many finance professionals earning six figures today may find their roles automated, downsized, or completely eliminated. In this video, we uncover 10 high-paying finance jobs that AI is most likely to delete and explain why this transformation is accelerating faster than most people expect. 1. Financial analysts. Financial analysts are trained to study company performance, analyze financial statements, forecast growth, and guide investment decisions. Traditionally, this role required years of education, certifications, and hands-on experience. However, AI systems now outperform humans in many of these exact tasks. Machine learning models analyze massive datasets, identify trends, detect anomalies, and generate forecasts within seconds. AI does not suffer from fatigue, bias, or emotional decision-making. It continuously learns from new data, improving its accuracy over time. Hedge funds, banks, and multinational corporations already rely heavily on AI-driven analytics to guide strategic decisions at scale. As a result, the need for large teams of human analysts is shrinking rapidly across the industry. While a small number of analysts may remain for oversight and interpretation, most routine analysis work will be automated. Financial analysts who fail to evolve into AI-assisted strategists risk becoming obsolete well before 2030. 2. Investment bankers. Investment banking has long been associated with prestige, power, and extremely high salaries. Bankers work on mergers, acquisitions, IPOs, and large-scale financial deals. Much of this work involves valuation modeling, scenario analysis, and risk assessment, all of which are areas where AI performs exceptionally well. Advanced AI platforms can simulate deal outcomes, analyze market risks, and generate valuation models faster than entire human teams working together. These systems reduce human error and significantly cut operational costs for financial institutions. Investment banks are already reducing junior and mid-level roles as automation handles analytical workloads more efficiently. By 2030, investment banking will require far fewer humans. Only top-level decision-makers and relationship managers will survive, while traditional analyst-heavy structures will largely disappear. 3. Accountants. Accounting was once considered a recession-proof profession. Bookkeeping, audits, and financial reporting required precision, consistency, and regulatory compliance. Today, AI accounting software categorizes transactions, reconciles accounts, flags inconsistencies, and generates reports automatically with minimal human involvement. Cloud-based systems now provide real-time financial insights without delays. Even audits are increasingly automated using anomaly detection algorithms that identify risks instantly. Businesses no longer need large accounting departments for routine financial tasks, especially in small and medium enterprises. Accountants who limit themselves to traditional tasks will struggle. The future accountant must act as a strategic advisor who interprets AI outputs, explains implications, and supports business decisions rather than manually processing numbers. 4. Tax advisors. Tax laws are complex, detailed, and constantly evolving, making them ideal for AI automation. Intelligent tax systems interpret regulations, identify deductions, optimize liabilities, and file returns automatically. These systems update themselves when laws change, reducing dependency on human monitoring. For individuals and small businesses, AI-powered tax platforms are already replacing human advisors. Errors decrease, compliance improves, and costs drop significantly. As adoption grows, basic tax advisory services will become less valuable and less demanded. Only highly specialized tax experts dealing with complex, international, or legal scenarios will remain relevant in the long term. 5. Loan officers. Loan officers traditionally evaluate applications, verify income, and assess borrower risk manually. Today, AI underwriting systems perform these tasks instantly. Machine learning models analyze thousands of variables, including spending behavior, transaction history, and repayment patterns. Banks benefit from faster approvals, lower default rates, and reduced staffing costs. Human loan officers are increasingly unnecessary except for rare or exceptional cases. As digital lending platforms expand globally, this role will continue to shrink rapidly. By 2030, most loan decisions will be made entirely by algorithms, not humans. 6. Credit analysts. Credit analysts assess default risk for banks, corporations, and investment firms. This role relies heavily on data interpretation and predictive modeling, which are areas where AI dominates. Intelligent systems evaluate creditworthiness using real-time data and long-term behavioral patterns. AI also simulates economic stress scenarios, predicts portfolio risk, and recommends risk-adjusted strategies automatically. These tools outperform traditional analysis in both speed and consistency across volatile markets. As a result, financial institutions require fewer human credit analysts. Those who remain must focus on strategic oversight rather than manual evaluation. 7. Insurance underwriters. Insurance underwriting revolves around risk calculation. AI systems now analyze health records, driving behavior, lifestyle data, and historical claims to price policies dynamically and accurately. What once took days or weeks now takes seconds. AI reduces fraud, improves pricing accuracy, and lowers operational costs for insurers. Manual underwriting is becoming inefficient and outdated in competitive markets. By 2030, most insurance policies will be priced and approved automatically, leaving limited roles for human underwriters. 8. Financial advisors. Robo-advisors are transforming wealth management globally. These AI platforms create personalized portfolios, rebalance assets, optimize taxes, and manage risk continuously without emotional bias. For average investors, AI delivers better results at lower costs. Human advisors will survive mainly in high net worth or emotionally complex situations that require personal trust. Demand for traditional advisory roles will decline sharply as automation becomes the standard. 9. Stock traders. Modern trading floors are dominated by algorithms. AI trading systems execute thousands of trades per second, exploiting micro-market inefficiencies humans cannot detect or react to. Emotional decision-making puts human traders at a disadvantage in high-speed markets. Firms increasingly rely on AI for speed, precision, and consistency across asset classes. By 2030, most trading activity will be machine-driven, with minimal human involvement. 10. Compliance officers. Compliance involves monitoring transactions, detecting suspicious activity, and ensuring regulatory adherence. AI-powered RegTech systems scan massive datasets continuously and flag violations instantly. These systems adapt automatically to regulatory changes and significantly reduce human error. Companies now need fewer compliance officers as AI handles routine monitoring efficiently. Human oversight will remain for ethical judgment and final decision-making, but large compliance teams will no longer be necessary. Outperform humans in pattern recognition, forecasting, and execution. This shift forces a hard truth. Technical skill alone is no longer enough to secure a future in finance. Universities, certifications, and legacy training programs are struggling to keep pace with real-world automation. Many professionals are preparing for jobs that may not exist by the time they graduate. The safest career path is no longer specialization in a single role, but adaptability across systems, data, and technology-driven decision-making. Those who understand AI's limitations as well as its strengths will hold the real power. Finance professionals must begin treating AI as a collaborator rather than a competitor. Learning how models are trained, how biases emerge, and how automated decisions can be supervised will separate leaders from those left behind. Strategic thinking, ethical responsibility, and human judgment will matter more than repetitive analysis ever did. If this video made you rethink your career in finance, don't ignore the warning signs. Artificial intelligence is accelerating faster than regulations, education systems, and career planning models can realistically adapt worldwide. Finance professionals must stop assuming past success guarantees future stability, because technology rewards flexibility, learning, and proactive reinvention over comfort. Those who combine financial knowledge with AI tools will multiply productivity, income, and influence while reducing uncertainty. Waiting for certainty is dangerous because disruption rewards early action and punishes delay. Like this video, share it with someone working in finance, and subscribe to the channel for more future-focused insights. AI is not coming. It is already here, and those who adapt early will control the future.